So let's talk about the professional business ethics. Now, business ethics is based on trust. And trust here we mean the reputation of the organization itself. Definitely there is a reason why ethics based on trust. The reason is to achieve the stakeholder, and you know the stakeholder of your company, strategic objectives. To please your stakeholder, you have to have ethics based on this trust. And somebody would say, how is that? I'd say, well, by building an accountability framework. And that is this framework, which we call it today, and it is a hot issue. Look at the articles, look at the books, look at the magazine, look at the annual reports of most corporations and public companies. They call it the governance. Because it is related to the companies, it's called corporate governance. But also we can, here in our course, we'll call it also accountant governance, the accountability. So you will be accountant for your behavior, for your job, as an executive, as a director, and as an accountant. Now, sometime from the malpractice and from the bad behavior of some people, some organization, okay, and some businesses, we come to good thing. We create something. This is, I'm talking about the people who are always following the rule and stop the bad practice, the bad malpractice, to avoid any financial crisis. Now let's go to our famous example, which I'm sure you know it and you cover it in all of your business and accounting courses. Do you remember Enron? Yes, you do. Do you remember Arthur Andersen? Yes, you do. Do you remember WorldCom? Yes, you do. And because of this organization, and plus, I put a big plus, frozen financial market of 2002, all of these, we call them the contributor to the financial crisis. Because of these, it come the creation and evolution of the US SOX, S-O-X, and you know what is S-O-X, the Sarbanes-Oxley Act, which is in fact to protect the stakeholder and make the organizations, and between the brackets I say the directors, the executive, and the professional accountant accountable for these people. At the end of the day is to protect the organization in one side and to protect the stakeholder in other side. So, because as I say, we have the crisis and financial crisis, okay, and because of these contributors to the crisis, it's come the evolution and the creation and the introduction of the governance framework, that is the support. And also to have a good business environment, we need in fact the support of the stakeholder, the investors, the creditors, the clients and customers, suppliers, everybody dealing with the company. We need their support. and to give them to receive the support from them, we should give them the trust, and to give them the trust, we should give them our ethics, our good behavior. Because ethics at the end of the day simply mean that is what the stakeholders are expecting from us. Of course, in good deed, in good information, transparencies of the information, our annual report, free of bias, free of malpractice, free of let's say any crisis or any problem. So as I said here, that contribution of the disaster, or like Enron, as I said, Arthur Andersen and WorldCom, and also plus ongoing pressures on more trusted governance. Of course, due to the first one, or to the point which I mentioned about Enron and Arthur Andersen. Now that will give me the development of an appropriate understanding of the new SOX. Of course, that's the SOX word of the director and the executive and the accountant. I know well the course, as I told you, it is incentive. It's based on reading. Now, if you're looking at a distinction mark of this course, you have to read your book plus other books plus articles plus magazine. But if you want to pass only, again, you can focus on the notes which I give you and of course your book. So just to give you a summary of what of our let's say course again, and that will be the end of the session, because as we say, we are late and the time is now moving very fast. And after that, I'll give you just a brief introduction about myself. And please don't do it again. Don't come late again, because we are dealing with ethics, and we want to end this course by becoming an ethical, professional accountant. We hope so. Now, the summary, I put it in 2 points. I said, if you want to take the notes, I'll read my summary for you, because I know at the end of the day you will go home and say, what did that man say today? But again, take this note with you. Please start writing. I'll read it very slowly, just to take it with you home. I say, what I covered today is that I say stakeholder supports require trust. Remember, stakeholder support requires, yes, trust, between the brackets, both corporation and accountants. And if you will want to put professional accountant, that's fine for me. Number 2 is very important. Earnings, profit generation, and trust require changing. Changing in what? Changing the strategy of the organization. If you want to profit, and if you are expecting the trust, change your strategy. Change the risk management. Change the operation of your business. Change the planning of your business. And change the most important thing, the decision making, okay, of the corporation to take account of interest. You are with me? Shall I repeat it? Okay, I'll do it. Okay, please. Okay, again, I said earning profits and trust require changing the corporation strategy, the risk management, the planning, the operation, the most important thing, if you want to underline this, the decision making of the corporation to take account of the interest and expectation of the stakeholder group. Thank you very much for attending this session today. But as I said, from Thursday, we will start the course incentively. And if you get the book, please read chapter 1 before I explain it to you, and prepare your question if you want. Now let's talk about myself, but I know it is not important. I have only 2 minutes and I'll talk about it.